It's a very common but very sad story I hear almost every day from people entering the community here. Altcoin portfolios that are down 60, 70, 80%. And the big request, how can I get that money back? While the altcoin market did have a very hard time in the last 3 years, right? The altcoin dominance went from 19% down to 7%. That's actually not the main issue. The main issue is that this is not reflecting how bad the average altcoin portfolio is down, because this is just comparing market caps. But most altcoins have an expanding token supply. As in, we just have 100 tokens starting off the project with, then that supply grows to 200 tokens, 300 tokens, 400 tokens. And so the supply grows very, very quickly while the demand cannot catch up. This is not reflected by the dominance charts. There are always the 1 or 2 altcoins that make the multiple X returns, but the vast majority of altcoins is going down, right? This is the performance of the top 100 altcoins in the last year. And while Bitcoin went down by roughly 10% during that time period, have a look at those minus numbers here, right? They tend to be much larger than just minus 10%. Most altcoins destroyed the portfolio massively. And again, the reason for that destruction is emissions. Every week we see on average 1 billion worth of new tokens hitting the market from the existing projects. So this is not just new projects launching, this is the current projects increasing their supply. So that's vesting unlocks, that's early investors that sell off, that's insiders that get new tokens. And that expansion in supply can normally not be offset by the project's growth. And so everybody that has these diversified altcoin portfolios, they tend to, over the long term, just lose. There is not $1 billion worth of capital flowing into the altcoin market every week. That's the fundamental issue. And this is how everybody gets suckered into buying those losing tokens. Let's have a look at the worst performer in the last year, Celestia or TIA. That went down by 92% in the last year. And it's the big channels that talked about Celestia 1 year ago. Coin Bureau, for example, can TIA 10x, did the exact opposite, right? It went 90% down. Or have a look at this, CoinGecko or Bankless. And while those might not be 100% marketing videos, the fundamental problem still is that those videos generate attention for the asset. And that attention on average leads to purchases, and those purchases on average lead to losses. And that's the fundamental issue. That's why there's now apathy in the market. That's why most people don't want to know anything about individual crypto assets, but even about Bitcoin. Anything that has something to do with crypto is now burnt earth. And so yes, there is a good case to be made to just stick with Bitcoin, because Bitcoin tends to go up long term, right? We can just buy Bitcoin over the long term and be okay. The problem though is that Bitcoin as a risk on asset doesn't really outperform that well anymore. The chart looks great, the chart is going up, and that's partially because of monetary expansion, right? The money supply in the US grows by 6.8% per annum. And so that's the minimum expectation we should have for any asset that's not inflationary, as in stocks should appreciate by that value. And gold and property might appreciate a bit slower because gold is inflationary and property tends to age. So yes, it's okay when those don't appreciate by 6.8%. But in general, right, when the US dollar is devaluing quite rapidly by a factor of 77x over 66 years, we should also expect a similar return from our investments. Now let me tell you how I made my first money in crypto. It was not trying to find the next altcoin that makes 100x, buying Dogecoin very early and then making a lucky shot growing the capital very, very quickly. I took the conservative approach because I knew already at the time that the higher we go up the risk curve, the more it becomes an asymmetric return game. As in, if we buy something, we might hope for the multiple X return, but more often than not, we just lose everything. It's almost like buying a lottery ticket. But once we want to deploy significant capital, once we want to get returns that actually are life-changing, we have to take bets that are somewhat safe over time, right? Where we can be okay if we get some volatility along the way, but we can be confident that long-term we will see price appreciation. And so I started buying my first Bitcoin in the year 2018. I was following Bitcoin already through that bull market. as in I decided not to buy while the prices were going up because I still remembered stories of my parents, how they got into the .com bubble and they luckily sold still in profit before the bubble completely burst. But I still remember how it was very stressful. I still remember how prices absolutely collapsed. If you're enjoying this video so far and you're getting some value out of it, then feel free to give this a like. It will help the channel grow. It will help spread the word. Thank you very much. And so I did see how Bitcoin probably at some point will turn around, and sure it did, but I bought a bit too early. Right, I bought over here and we subsequently had a more than 50% drop, but I still continued buying. So I still did dollar cost averaging during that time. I bought more and more every single month. I also bought during the COVID crash, and then I stopped buying once we got closer to the all-time high, and I sold quite a bit at around 60k. So my first run up was quite successful. But here's the problem. What you're seeing here actually is not the Bitcoin price. We see Bitcoin relative to the Nasdaq 100. So how is Bitcoin performing relative to technology stocks? And really, in the last 8 years, Bitcoin hasn't outperformed technology stocks that much anymore. So what that means is if we deploy all our capital in Bitcoin and hold it over long periods of time, we might not necessarily make that much money. That being said, we have a lot of volatility, and the volatility can be advantageous if we don't just make a lump sum investment, but when we actually dollar cost average into the market. Let me show you how this works and how we can actually benefit from the volatility, because dollar cost averaging can be superior to just buying all at a lump sum. Yes, people say that time in the market beats timing the market, but that's not necessarily true for an asset that's as volatile as Bitcoin. So let's say you started buying Bitcoin 4 years ago. So one cycle at the end of 2021, you'd be up 83%. You just do a lump sum investment and you forget about your investment for a longer time horizon. That does work. But let's compare this to dollar cost averaging, as in buying $1,000 worth of Bitcoin every month for 4 years. Over that time period, you would have invested $49,000. That would have turned into $115,000, and you would have made 135% overall return. You would have made more return compared to buying everything at once, and you didn't even need to have all that capital available at once, right? You can just buy in all the time. The main difficulty with that approach is to continue buying when everybody thinks you're very stupid to stay in Bitcoin. When Terra Luna collapses, when FTX collapses, when the big next crisis comes, that's when nobody wants to buy. But you simply just continue buying every month $1,000. That's a superior strategy for a volatile asset compared to just putting in all money all at once. And it's definitely a superior strategy to trying to find the next altcoin that will make the 100x returns. There's a good chance that whatever altcoin you're looking at will actually be down 1 year from now. Again, 1 billion worth of new issuance in the altcoin market hits the average altcoin portfolio in terms of dilution every single week. The insiders continue to make money from the average retail investor. You don't want to be dumped on. If you want to get into the altcoin market, I think it's best to be delta neutral, to be completely neutral to the market, to bet on falling prices of altcoins that have a very high token supply expansion, where the insiders tend to continue to sell off. And then we go long, we bet on rising prices of something that tends to be comparatively stable. So we go short one thing, we bet falling prices on one thing, we bet on rising prices of the other thing. So no matter where the market is going, we always have these opposite movements. Thus, if the market goes up, nothing happens to our portfolio. If the market goes down, nothing happens to our portfolio. We only make money because we think that asset A will do better than asset B, because asset B has all of that token inflation, all of the insiders selling over time. That's the big thing where we make money. I really do believe that the diversify and spray and pray approach does not work for crypto, because crypto doesn't have the due diligence of the stock market. Crypto has all of the dilution, all of the dumping by the early investors. We have this to a much smaller degree in the stock market. In the stock market, there are limits to how much the original investors can expand the supply of stocks. Now, when a company in the traditional sense, so in traditional finance, raises money, that company uses those funds to make new investments and hopefully increase the valuation of the company. So it should be relatively neutral to raise money. It shouldn't be a problem for the investors. When a crypto project dilutes the tokens, when it issues new tokens, that dilution doesn't necessarily go into investments for the crypto project. It rather just goes to the early investors using this for whatever, right? Maybe to launch new projects, maybe for consumption, maybe for other investments, who knows? But it doesn't necessarily go to the benefit of the crypto project. It's just dilution. It's just negative. Now, if you find this all a bit complicated and you simply just want to copy trade whatever I do, then there's also the premium membership of this channel. So whenever I bet on rising or on falling prices on a particular cryptocurrency, I announce this in the channel. And in July of this year, we also opened an automatic copy trading pool. That pool so far has made 17.6%, while Bitcoin during the same time period crashed by more than 22%. That's the idea. We want to bet on performance independent of the macro environment. We might just go sideways in the market and we still make money. And if you're going down, we try to protect that capital. And we're achieving this by doing something called macro hedging, right? So we go long, say, a particular cryptocurrency while we go short the entire market. So we're really just betting on the delta. And so we're not really interested what the general market is doing. Even if we are in a bear market, by just betting on the deltas, we can still produce performance. You can simply copy trade and even do this with leverage, right? Here are a few trades made by community members. Or if you want to invest in the next copy trading vault, that will be available to the annual members of this channel. The next copy trading capital pool opens in January of 2026. Thanks again for watching. Hope to see you on Premium. Link pops up here on the screen. See you next time. Cheers.